What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting and trading method we use can be implemented to trade any company that is traded on the public U.S. public stock market. Make sure you hit that like button and hit the subscribe button as well if you enjoy this video. Really helps the channel grow. Thanks again to all those that continue to tune in. Glad that you're getting some useful information out of these videos, and just continue to wish success in the market out there. Make sure you hit that notification button as well. That way you're notified when we release bonus content. This is one of our nightly and weekend videos where we identify triggers and targets for trades ranging from scalps and intraday trades to long-term swing trades and leaps. But the bonus content that we release from time to time will dive deeper into more specific concepts or topics. So make sure you are alerted about those by hitting the notification button. And if you want any further details about how we set up our charts, make sure you hit that bonus content as well on the YouTube page. For more information about the strat, the base of our trading method, you can find some free information in the description of this video. So I encourage you to watch the full video, because we go over a lot, not just the triggers and targets, but we give some pretty good insight into price action on all time frames. So with that, let's go ahead and look at the agenda for the weekend video. We will go ahead and recap Friday's price action. Friday, October 31st, that is. Then we will zoom out and look at the week, month, quarter, and year. That's going to be a little bit more important this week as well, because not only are we starting a new week, but we are starting a new month on Monday as well, a new trading month. Then we will look at the market makers' expected move for the week of November 7th. And finally, we will zoom back in to set our 4-hour markers and the triggers and targets for Monday for the week of November 7th, as well as the month of November. All right, and then we'll do a quick review of the triggers and targets for the quarter and year as well. So just looking at today's price action, got a little bit more movement than we did yesterday. All in all, still kind of finished flat, but we got a little bit more volatility, a little bit more range in the price action today as opposed to yesterday. If you're not familiar with this channel, I'll go ahead and point out the main 4-hour markers that we talk about. They are the previous high a day up here at the top of the chart at 49.97, the overnight high here at 49.25, previous low a day down here at 47.27-ish, and the overnight low at 47.31. The last one we talk about is this where you see price level at 48.77. That's just the opening print or the first traded price of the day. So we keep track of those, and what we do in general is if we get higher lows at or above opening print, then we want to look to get into calls. And when we get into those calls, we target the overnight high and previous high a day. Whichever one comes first is a first target, whichever one comes second is a second target. Right? On the other side of the coin, if we open and we get price action to the downside, we look for lower highs at or below opening print, and we look to get into puts, targeting, of course, overnight low and previous low a day. Again, whichever one comes first is the first target, whichever one comes second is the second target, right? So that's just the general framework. If you just stick to those rules, I don't know how you can really come out losing in the end, right? It's high probability trades if sticking to the rules and taking into account things like, are we in an uptrend or a downtrend? Are we coming off of a lower high or higher low? From a day or week perspective, those things can kind of play in as well. But from a pure scalping perspective, at the very beginning of the day, these rules can kind of guide you to profitability from a shorter time frame perspective, right? This isn't something that you would use for swing trades or anything like that. This is purely intraday, right? So let's just talk about Friday's action. We got the open here at 48.77. We got a push up, push back down, lower high, lower low, just basically playing with opening print. But we got a bounce off of that market maker's expected move high. And again, if you're not familiar with the market maker's expected move, we'll go over that a little bit more in this video. But we did get a bounce off of that level. and pushed up to make a higher high. We then made a higher low, basically at opening print. So we took the opportunity to, once we cleared the high of this candle, we entered some calls. Real light. We don't play too heavy on Fridays. It's the end of the month. Not as big of a deal as like the end of a quarter, but just wanted to, take things light at the beginning of the day, right? So we did enter calls. We got the higher high. But then we did end up getting a lower high here, right? It's a soft lower high, but we counted it as a lower high, especially from a scalping perspective. So as soon as price went below this level, we went ahead and cut. So not a lot of profit there, right? But we knew that we were pretty stretched for the week, right? The gap ups to gap ups to gap ups overnight. And we knew that basically every day this week we've had some pretty sideways action. So we didn't want to get too lofty with our goals. It had already hit previous high day as well. So we could have been considered a little bit greedy for keeping them past that, right? We could have sold all of them or at least scaled out of a bunch of them there. But we actually stayed in the whole position because it was a smaller position. So once we got to here, we went ahead and cut it. Now, that did open up an opportunity for some nuance within the trading method, right? So we get the lower high here, the lower low. We get another lower high here. This is more of a solid lower high because it's not part of a 3 candle. And then we proceed to go lower low. This is where you can add some nuance to the repeatable strategy, right? So higher lows at or above opening print, we take those and target overnight high, previous high a day. At that point, we've got to look at that as a possible reversal, right? We reached the target. So now is price going to take us back to the other side of the spectrum for the day, right? So what we did is took note of the fact that the rejection was off previous high a day. There was more failure at overnight high as well. So more than likely, we're going to at least get back to the opening print. And if we fail opening print, then we have an opportunity to, stay in the puts or even add to the puts at that point and see if we can reach that overnight low and previous low a day. So we went ahead and entered puts here. After the more solid lower high, we entered puts at the low once we went below this low, and then we got the lower high here, push down, lower high here, push down, lower high here. It was very orderly in the way that things broke down. Push down, lower high. Here we got an equal low, and then we're at last year's 50% line. We talked about yesterday in yesterday's video about 46.79 in last year's 50% line, how it had been resistance in the past and how it would present an opportunity to offer support. That's what an uptrend does. It turns resistance into support. So we did get the bounce here, and we exited as soon as we got the higher high after the equal low, which basically was that previous low day, which was the target anyway. So a lot more profit we were able to get on the downside action today. Now, you could have then used some nuance and said, hey, we hit previous low day and we've failed to go below it. Maybe this is the time to go long. So we did add to our November 21st calls, and no, we did not. We were looking to enter some December positions, but we did not, just because the day still has not offered a clear higher low. So we did hold off on purchasing those calls for December. That was the price action for the day. We pushed back up. We got to opening print, rejected off of that. That could be taken as a sign of weakness going into the weekend. But at the same time, we closed above previous low day, overnight high. So basically closed within yesterday's price action, not too far from opening print. So all in all, kind of a flat day, right? So, and actually, if you look from close, we were actually up, right? So yesterday's close was down here at 47.33, and we closed today at 47.78. So actually closed green on the day if you go from a close to close price, right? So that's what we had intraday. We talked about the day chart. Let's pull up the 4-hour real quick first before we get there. And let's go to, there we go. And we can see, remember, we had the, let me make this bigger. Sometimes I forget that there are people on the phone and they need this a little bit bigger. So just looking at the candle structure for the for the 4 hour, right? We talked about yesterday how we triggered the 1, 2 up, combo 2 down, and there was the opportunity to continue with the combo 2 down to reach the magnitude, which is the low of this 3 here, the low being 45.94. So initially in the morning we opened and pushed up, right? So this was locked in as a higher low at that point. Now we've got a situation where it went red 3 or bearish engulfing candle, and this could be considered a soft lower high at this point, right? So we've got this high up here, the week's high, the high of the week, and then we've got this high before we push back down to make a lower low on the 4-hour perspective, right? So that's considered a soft higher low right there, and we pushed to a soft lower low so far, and we got to see if maybe this turns into a kind of a messy combo 2 down to complete this strat reversal. But again, we did finish inside candle, second hour half of the day in green, so closed above where the second 4-hour candle opened, and it looks like we're getting a bounce off of this 46.79, which was last year's 50% level. And we look at last week we had a little bit of rejection there, but it is a point of inflection that we want to keep on the chart and keep note of. Right, we didn't quite push down and finish the strat and test the week's open, but we did pull back, right? So again, still finish the week green. Before we get to the week, let's look at the day. So again, we've got, we went 2 up in that first 4-hour, and it looked like this was locked in as a higher low, or yesterday was locked in as a higher low, right? But then we ended up going red 3 or bearish engulfing candle on the day. So this again is a soft lower high on the day. So we've got to see where this pullback finishes out, right? We've got the 2 gaps from earlier this week that are still on the board. We had a nice run this week, right? As far as like breaking out of the range that we were in the previous 2 weeks, right? Here's that range, popped out of it. And so it looks like we're starting to see some support there, but we just want to keep in mind that we still got plenty of room to pull back to create higher lows from a day perspective. This would be considered a soft higher low because the 3 followed it. So this could be considered just like a combo 2 down as it continues to go down. And we can, fill this second gap down here and still be making a higher low. So we talked about yesterday to kind of expect a bit of a pullback and actually look for it so that we can get better entries on longs if we are going to continue the push up. But for now, nothing to really be afraid of at this point, and that's further evident by when we go to the week. Let's switch to the week real quick, and we can see. Let's get this clear. There we go, and we can see that here's the. Let me make this a little bigger once again. Here's the bull flag from April, right? Starting down here. Here's the flagpole. Here's the flag. So then here's the push from that. We've reached the 100 fib extension of that move. So not unexpected that we could see some resistance here, saying that we've already reached that full extension, last year's 50% line. Right, and you can see where we did go 2 up on the week, but we have that wick on top. It's an inverted hammer, but it's still green, right? So again, this could be what we call in the strat community a shooter, a Momo shooter, which is a momentum shooter, which is just an inverse hammer that's green in the sequence of higher highs. You can see we went higher high, higher high, higher high, right? So just could be a Momo shooter there. Again, we've got plenty of room that we can pull back here before we make a lower high, all the way down to 2350 before we make a lower low, right? So nothing to be afraid of. Again, we got a couple gaps down here that could act as magnets for us, that could bring us back into this area where we had a little bit more of chop action from a day and intraday perspective, and maybe find some support here and continue to push up, or could continue to pull back to a greater support area. Again, we've still got a couple more gaps down here from the previous weeks. I won't go too low with the gaps, but these lower gaps could bring us down to get this lower low on the week perspective. So we're a long ways from that, kind of getting ahead of ourselves there, but just something to keep in mind, and knowing we are kind of overstretched. Don't usually bring up RSI too much, but you can see we're Up here at 75, not quite to 80, but we're getting up there. So, oops. So, it wouldn't be unreasonable to expect some type of pullback. Going to the month, just again switching. We're going to be in a new month starting Monday, so you want to keep that in mind. Do we pull a 2 up, 2 down this next month? It's got a long ways to go pulling down, but again, if we fill those gaps and test this year's 50%, this year's flip, that could be a possibility. Right. So again, don't want to get too far ahead of ourselves. We're a long ways from that right now. Things are looking very bullish. Not a whole lot negative to say. If we get some more, pullback and action inside of last month's candle or October's candle, we'll see how it goes. If we're above the 50% line of last month, I don't see it as being too much of an issue. If we start to get below that, then we'll definitely be taking note. And at that point, the daily trend is probably turned to down. The weekly may have at that point as well. So we'll have other indicators before we get to that point. So again, things looking still very bullish from a monthly perspective. I don't want that. I don't want it to seem like I'm saying we're topping or anything like that. I don't know. I don't call tops. I don't call bottoms. I just respond to price as it comes at me. So I'm just prepared with options to the upside and downside. Well, options as far as triggers and targets to the upside and downside. Right. So if we go into this quarter, right, again, this is if you're familiar with this channel, you know that this is probably my favorite chart for right now. We did trigger the 1 combo 2 down, combo 2 up, right? Triggered at 36.15, and as long as we're above that 36.15 in this combo 2 up pattern, then the magnitude for that move is up here at 70.08. All right, so we've got this gap up here that could act as a magnet as well. May see some corrective activity up when we close that gap, just because we do have this monthly broadening formation up there. But again, I wasn't calling for 70.08 this quarter, a couple weeks back, especially a month back. But I don't still. I'm not saying we're going there, but it's much more of a possibility in my eyes at this point by the end of the year than it was at the beginning of October. So again, things looking very good from the quarter perspective. Nothing breaking down. Feeling pretty bullish, right? And from the year, what's happened. We had the 1 2 up 2 down trigger, but it did not fully reach its magnitude, meaning it made a higher low, and we've turned into a nice green hammer on the year. Again, want to continue to try and push up and close at the high of the candle at the end of the year. That way it gives us a good probability of going 2 down 2 up in 2026 with that 70.08 as the magnitude, right? And then once we get that 70.08, we're looking at all-time high territories there. So again, don't want to get too far ahead of our skis, but from at least a long-term perspective, right? Things are looking very good. All right, so let's go ahead and zoom back in here and let's take a look. We need to talk about the expected move, market makers' expected move for the week, right? So you can see on the chart, well, hopefully you can see if this screen is big enough here. At the top of the screen, we've got 53.69 as the market maker's expected move high, and at the bottom of this chart is 41.87. That's the market maker's expected move low. Now, to do that, I'm using Thinkorswim, but I bring out the options chain for next week for SOXL, and we can see over here at the right there's a plus or minus 5.908. So I just round that to $5.91. So the market makers expect that there will be a plus or minus move of $5.91 next week, or the week of November 7th. So if we look at the close price on Friday, it's $47.78. Add $5.91 to it, you get $53.69. If you take $47.78, the close price of Friday, and you subtract $5.91, you get $41.87. All right, so that's how we get the market maker's expected move. That's how we put it on the chart. It's in purple. If you're not familiar with the color coding system, purple is for the week, orange is for the day. So that's why we have it in purple, and we just like to keep that on the chart. You can see the market maker's expected move low for the week would include essentially closing that second gap from earlier this week. So again, not crazy to expect some pullback this week. In fact, the market makers show that we could close those two gaps, right? Or at least in their eyes. Okay. So that's the market maker's expected move that we've got there. Oops. Let's go to our notes. And we can see we've got it charted out here, spelled out here. Expected move for the week of 11.3 through 11.7, $5.91, giving us a range of 53.69 to 41.87. Okay. Now let's take a look at let's zoom in. We'll set our 4-hour markers and triggers and targets for not only Friday but for the week. For Monday, but for the week. Let's go ahead and bring up our scalp chart. And we'll just kind of talk about the general rules again for the repeatable strategy, right? So let's just bring things into focus here. So we've got all the 4-hour markers on the chart. There we go. So again, general rule, higher lows at or above opening print, we're looking for calls. Lower highs at or below opening print, we're looking for puts. If you're just starting out, just follow those basic rules. Now, if you've got more time trading under your belt, that's when you start putting in the nuances like what we did today, and we're able to find that big downside move, right? But in general, higher lows at or above opening print, calls. Lower highs at or below opening print, puts. So we can see that the high for Friday was $49.99. Overnight high for right now is $49.25. That will most likely move by the time price opens Monday. Same with the overnight low, but we do have Friday's low down here at the bottom of the chart at $46.71. So we've got those on the chart and in line. Let's say we get some choppy action overnight or over the weekend, and we open in the middle of the range tomorrow, right? On Monday. Say we open in the middle of the range at 48.51 on Monday, right? So that's what we'll look for, the opening print. We chart it, and then we look. If we get a push up, maybe a rejection off an overnight high and a little bit of pullback, then a higher low at or above that opening print level, then we want to get into calls, and our first target is going to be overnight high. Whether that's enough magnitude for you or not, that's up to you. But the second target would be previous high a day. Same thing if we get price action here and we open to the downside, and maybe we get a bounce off of last week's 50% line and we push back up, but then we reject at or below opening print. We want to go ahead and get into puts. First target being overnight low, second target being previous low a day. All right. Now, I don't want to make it too complicated, right? Because it shouldn't be. It's trading shouldn't be overly complicated. So if you have any questions about that, definitely let us know in the comments. But I think we've seen very good results. Well, for ourselves, we've seen very good results. But for those who have, taken these words and applied them in their own trading, we've had a pretty good response to that from them as well. So. Very simple. Just keep it simple, and you don't have to trade every day, right? That's the key to this. You don't have to trade every day. You're not always going to get a plus setup from that scalping perspective, that intraday perspective, and you might have to take a trade that's more from the 4-hour or 1-day perspective, or just not even trade at all, right? That's the key. It can make you money every day, but you don't need to force it if it's not there, right? So I think that's enough on the scalping perspective. Let's look at more of the intraday chart. And we'll bring up the 4-hour chart, right? And as far as our triggers and targets go, let me make this bigger for those on the phone. There we go. All right, so we can see, just bringing in to view everything that we had. At the end of the week, pushed down. We've got the gaps below. All right, so if we do get a trigger to the downside, there's not a lot of magnitude from this strat perspective of the 2 4-hour candles from Friday. But if we are going to combine this to make this a messy combo 2 down, it does continue this 3 2 up combo 2 down strat, where the magnitude would be the low of this 3, which is 45.94. So if we do, if price action does go below the low of the second 4-hour candle from Friday, that triggers our entry. Now that entry is 46.74 and the magnitude is 46.71. So there's nothing there as far as magnitude is concerned. You wouldn't be entering on that strat. You'd be entering on this continuation of the 1 2 up combo 2 down, looking for the low of this 3 here. All right. If we do get that, you got to look at how momentum is and things of that nature, because that could just be the start of the at least the first gap fill, if not the both gap fills. And again, not saying it's going to happen on Monday, but that could start the progression throughout the week where we do actually close those gaps. Now, to the upside, there's a little bit more magnitude to be had, right? If price action goes above the high of the second 4-hour candle from Friday, which is 48.72, the magnitude for that move is 49.99. So we breached this high. This high is the target, right? And that brings us back into play with this. We just drew a lower high line. It's not a downtrend line yet from a day perspective because we haven't had a lower low. But it does look like a soft higher low was set here on the day perspective. So could we run into a little bit more resistance once we get to this level? Quite possibly. But if we do break through that, I would put that more in the bullish side of things. That okay, we're gonna at least test last month's high, last week's high, and possibly continue to push through. All right, it's from that's more of an intraday trade. Now, if you want to look at a full day trade, well, even that would be more of a full day trade on the 4-hour chart. Could be a 4-hour trade, but a lot of times it turns into a full day trade. But if we're looking at things from more of a day trade, overnight swing perspective, let's look at the day chart here. And again, we just talked about how we've just set this soft higher low with this red 3 or this red bullish engulfing candle. So again, don't want to get over our skis and thinking we're just going to fill these gaps immediately, but it's more bearish candle than a bullish candle. If you ask me, just looking at pure candle structure, the individual candle, right? But now if we put it into the mix of what's been happening here, we're still in an uptrend. So if we do get price action on Monday that goes below Friday's low, then that triggers the 3-2 down continuation. Targets would be the lows of these candles and then the gap close, right? We do have the half gap here as well, intraday that could be a bounce point and then it come back and fill the next day. But we've talked about and shown history before of gaps off of, or bounces off of half gaps. So I want to keep that in mind, and that would be a good place to put in a higher low. To the upside, we would have a 3-2 up continuation, and we would just be looking to at least get last week's high, which is also last month's high, and see if we can break through this lower high level. If we get more to the upside, that'd be great. We've got this 138.2 fib extension from the April 7 low bull flag, right? So that could be our next target there, and we don't have any real broadening formations coming across too flat right here. We've got this daily broadening formation up here, which would seem to indicate that we wouldn't be stopping at this fib extension. We would continue to go through. Again, not saying it's going to happen all tomorrow, but if that starts to roll into Monday, Tuesday, Wednesday possibly. All right, so I guess that's enough talking about, or just looking at the charts. Let's look at the hard numbers, right? So we know we've got a gap above. It's a little ways away still, but those gaps below are much closer. So they could be acting as a magnet. And we talked about on the 4-hour candle. If we go to the downside, it's a red 3, green 1, 2 down with not a lot of magnitude, right? Triggers at 46.74, magnitude is 46.71. We did go ahead and put an extended target of 45.94. It's I guess not too much of an extended target, but that would be our next target to the downside. That would be the bottom of that candle to the left of it that we were looking at. Now, if we get price action to the upside, that gives us a 3-1-2 up, triggering at 48.72 with a magnitude of 49.99. We did go ahead and put an extended target of 50.76 on there in case we wanted to push through, last week and last month's high. From the day perspective, that would give us that's not a 3-2 up. Yeah, it is 3-2 down. I don't know why we didn't change this, right? So we had a red 3 today. So if we go to the downside, it's a red 3, 2 down, triggering at 46.71. And we've got our targets of 45.94, 45.49, and so on until we get that full gap close. Now, the reason why I'm putting so many of these in here on the day chart is, again, we're in an uptrend, right? So don't want to get too far ahead of ourselves. Yes, the gaps are there. Doesn't mean they need to get filled. So any of these are valid bounce points on the day, right? We're not going to bring those up on like the week chart, right? These are valid on the day for bounce points. Now, if we go to the upside, we get that 3-2 up. That triggers at 49.99, targeting 50.76, 51.91 from there. Put some extended targets on there if we really get to ripping. Not a whole lot of catalysts. Yeah, it's still earnings season, but nothing's as much as this week, I would say. At the same time, market makers are expecting a possible $6 move, so we did go ahead and put those on there. All right. From the week perspective, let me just flip back to the chart real quick for the week. We won't do it for the month and quarter, but just want to make sure that we have everything in perspective. All right, so we had this bear flag, bull flag, right, from April low to July high. Then we get the flag. And then we had our bounce off of there. We've met that 100 pip extension. So again, the gaps are there. If we get the 2 down next week, it just gives us an opportunity for a higher low. All right, we got plenty of room, right? But we are in this nice uptrend. So going back to just the numbers, if we go to the downside next week, that gives us, like I said, the 2 up, 2 down, triggering at 45.14, and that magnitude is pretty large on that move. It's 35.97. Remember, we almost pulled a red 3 last week, or a bearish engulfing candle last week. I think we were like 2 cents off from pulling that off last week. So, there's plenty of magnitude on the table. If we're really just falling, I've got extended targets here as well. But I would definitely be looking for this first, and wouldn't be expecting too much more from it after that, at least next week. If it continues to fall the week after that, okay. But, a $10 move for SOXL isn't a whole lot, but in the face of, the ripping uptrend we've been in, that's quite a bit of a pullback, all right? If we go to the upside, it's a 2 up, 2 up continuation, triggering at 50.76, and we've got our extended targets 51.91. Basically, the fib extensions for the bull flag from the April 7th low. All right. For the month, quarter, and year, I won't go back to the charts. Maybe we do need to go back to the chart, because for the month I messed up that strat. Let's just make sure that we get it in perfect. Yeah, 2 up, 2 down. I don't know why that. Oops. Let's just do that. 2 down. All right, so that would be a 2 up, 2 down on the month if we go to the downside, right? Quite a ways to go to trigger that, though. Got to get all the way down to 33.98 to trigger the 2 down on the month. If we do trigger it, though, however, we've got a target of 28.93, which is about halfway to the magnitude for that move. Again, we're in this uptrend. I don't want to get too far ahead of myself with puts as far as, okay, we've triggered 33.98. We're for sure going to see 23.80. That's not the case in an uptrend, right? So we've got a target with a decent magnitude on it, right? 28.93. That's about $5, and then another $5 to the actual magnitude, right? That's if we get the price action to the downside, triggering at 33.98. So a long ways to go before we actually trigger that. A lot less ways to go to trigger the 2 up, 2 up, which triggers at 50.76, and we've got our extended targets here. Again, a lot of those tying into the fib extensions for that bull flag that we had starting in April. On the quarter, not a new quarter, so we're still in this 1 combo 2 down, combo 2 up, because we're above this 36.15. We've hit a couple of the targets already, and then again, I went ahead and put some extended targets in here. Because the magnitude is 70.08. That's great. It's a big magnitude, but to just be real with ourselves before the end of the year, let's have a couple of targets in mind before we would actually reach that level, because it's still a lofty target to reach, right? But we're still bullish, right? And as long as we're above that 36.15, then we're okay. I don't see us going below 36.15 by the end of the year, but stranger things have happened. So for right now, we're bullish. We'll continue to do the nightly and weekend videos at which point you'll see us change our tone if price continues to go down and we see different triggers being hit right to the downside. But again, I don't want to say we're topping or anything like that. I don't want to say we're going to shoot off to 70 at the end by the end of the year. But right now we're looking in very good position, and we're just ready for price in whichever way it takes us. And then on the year, we talked about it. We had the 1, 2 up, 2 down, didn't reach its magnitude, so we've got the higher low. We turned into a green hammer on the year. So if we get that 70.08, then we're obviously going to be a green 3 or a bullish engulfing candle. But again, just as much as it can be achieved this year, I still think it's a pretty lofty target. So I don't expect a green 3 on the year, but at the same time, we've made a nice green hammer, and the closer we can close to the top of that year candle at the end of the year, the better chance we have of going 2 down, 2 up next year in 2026. And that has that magnitude of 70.08. So no rush to get there. We're still in good shape. We're not breaking down, even though we had this, red 3 on the day, a bearish engulfing candle. It's not the end of the world. If you zoom out and look at where we're at, we're doing just fine, and that pullback should, actually be expected and welcomed. We made some money off some puts today, and it could be that today put us in position to get better entries for longs if we were to trigger things to the upside, Monday and next week. So there you have it. Triggers and targets for, scalping Monday morning all the way through the year chart. I hope everybody's enjoyed the video. We enjoy putting these together. We enjoy helping people. Nothing sold here, all free. So, thumbs up goes a long way. It's free as well. So if you enjoyed it, if you found any value in this video, please give us a thumbs up. And to those who continue to tune in and watch, we really appreciate it. We get some regulars in the comments, and we like interacting with you guys. And again, we don't know everything here, right? We have an established pattern that's proven and repeatable. That's we've been using for years. But if there's ever something that you may be seeing on the charts that we don't see, let us know in the comments. We're more than happy to investigate those. I'd rather have all the information I can have without thinking that I know everything and or whatever, right? It's always good to have a devil's advocate out there, and presenting the opposite side, to see where any holes in your strategy may be. But anyways, I digress. I hope everybody's either having a good weekend or is going to have a good weekend. Try and keep the charts off your mind too much, right? We come back to them maybe Sunday night or something like that to freshen up before Monday's open. But enjoy your weekend. Do something or some things that you want to do that make you happy, and makes coming back to trading on Monday that much better, right? You're refreshed and you have a positive mindset going forward, and a lot of times I can help with creating profit. So like I said, if you're watching this over the weekend, have a good weekend, get some good rest Sunday night. If you're watching this Monday morning, I hope you had a good weekend. I hope you got some good rest, and look forward to trading out there with you.